There's a lot going on and a lot to talk about. For this reason, I'm thrilled to have on Trace Mayer, who recently spoke at CryptoPoco at Anarchapulco. Trace is an entrepreneur, investor, journalist, monetary scientist, and ardent defender of the freedom of speech and host of the Bitcoin Knowledge podcast. And more importantly, to me personally, he was the first person to get me into Bitcoin when it was $3 in 2011 and actually sent me a few Bitcoins back then, now worth thousands of dollars. Trace, it's a pleasure to have you on. Let's get right down to it. Is the reason Bitcoin is down a few $100s in the last few days due to concern about the potential fork? And if so, what is the current status of this potential fork?
Well, those are all excellent questions, and thanks for having me on again, Jeff. It's always a pleasure to talk with you. We've been longtime friends in this space. I don't think that the volatility that we've seen in Bitcoin has been that big of an issue over the last couple weeks. Personally, I always like to look at the 200-day moving average because that filters out all of the daily noise and all of the events and things that aren't really that relevant to the long-term trend. And when we look at the 200-day moving average of Bitcoin, the market cap is about $13 billion. And even at $975 Bitcoin, we're still looking at around a $17 billion market cap, which is a good 30% higher than the 200-day moving average. So, that just shows that Bitcoin is, in my opinion, fairly valued. It's neither undervalued nor overvalued, and it's just part of the normal everyday fluctuations that happen.
So it's your opinion that this recent slide isn't necessarily because of the fork, and that's interesting to hear and very interesting information because a lot of people do think it's because of that. One thing is for sure, this fork issue has become quite heated. You've definitely seen, it seems like there's two sides. There's the Bitcoin Core and then the Bitcoin Unlimited sides, and they seem like really heated rhetoric right now. And I think that's what's getting a lot of people wondering if that's what's causing this most recent drop in Bitcoin. So let's talk about the fork. Well, what's your opinion of what's going on with that right now?
Yeah, so first we need to understand what forks are in Bitcoin. Now there are what are called hard forks and there are soft forks. With a hard fork, what you do is you add or you change or remove a currently existing rule. With a soft fork, all you do is make a currently existing rule more restrictive. So soft forks are backwardsly compatible, whereas hard forks are not. So in this case, SegWit, for example, would be a soft fork because it is backwardsly compatible. It could be activated right now. It would immediately reduce the transaction fees that everybody in the Bitcoin ecosystem are spending. It would increase the scalability. It really would be a very good scalability solution. Bitcoin Unlimited, as I understand it, and I haven't really gone and reviewed a lot of their code or really looked at anything, mainly because I don't consider it that serious of a project compared to Bitcoin Core. But what they're proposing would be a hard fork, and that would, in effect, not be backwardsly compatible. And so anytime we go and start talking about a hard fork to Bitcoin, and we have contemplated hard forks to Bitcoin over the years, and there's even a hard fork wish list. All the things that we would want to put into Bitcoin with a hard fork. But in order to gather that type of consensus, especially among a $20 billion industry that's got hundreds of exchanges and millions of people, gathering that type of consensus is just going to be a very difficult thing to do. And so a lot of those things just remain on the hard fork wish list. And so I don't really consider any of the rhetoric or any of that type of stuff even that relevant because there's just so much money that in effect is voting for Bitcoin Core that it doesn't even take Bitcoin Unlimited seriously. And you can see that by the number of full nodes that are being run.
Yeah, I actually heard Roger Ver say recently, though, that he said something about he thinks they're going to be over 50% for Bitcoin Unlimited soon. I'm not sure where he got that number, but we are going to have, right after this interview, I'm going to interview Roger Ver. I'm actually going to put that for people watching. This is actually on the Dollar Vigilante YouTube channel. We're going to put the interview with Roger Ver on the Anarchast channel. We'll put the link to the Anarchast channel down below, so make sure you subscribe to that channel. We're going to put that interview there. Of course, Trace is an anarchist and Roger is an anarchist, but I decided just to put one, the Bitcoin fork is kind of a complicated issue. I didn't want to just put it all on the Dollar Vigilante channel, so we're going to put part of it on Dollar Vigilante, part on Anarchast. So right after this, I'm going to talk to Roger. I'm going to ask him a lot of these questions. But it appears like he's the one that's really pushing this Bitcoin Unlimited. And of course, Roger's a friend of ours. We just saw each other here in Acapulco and Acapulco. But why do you think he's pushing so hard to hard fork with Bitcoin Unlimited if SegWit is, as you say, is such a good solution?
I mean, that's the $100 million question, or in this case, $20 billion question. I mean, I'm longtime friends with Roger. I really respect his opinion in the Bitcoin space. He's invested in a lot of companies, some of the same companies I've invested in. You know, we have a long history in this space. I consider him a personal friend, and it's interesting. He's actually in favor of solving a lot of the problems that SegWit poses. However, as he stated down there at Anarchapulco when asked one of the questions, he's not necessarily in favor of SegWit as currently applied. So that kind of is a little perplexing to me. I don't know why he's so interested in Bitcoin Unlimited. Personally, in my opinion, money follows management in business. And in Bitcoin's case, the management are the developers that are creating the software that you then use or run, right? Because the software that you use or run, it engages in what's called network consensus and economic consensus. So when we're dealing with a fork, you could have mining power that causes a fork by following Bitcoin Unlimited software, for example, but now you're off on your own separate Bitcoin Unlimited network because you've changed a rule. So everybody who's running Bitcoin Core full nodes, they're going to stay on the Bitcoin, the original Bitcoin chain, and everybody running Unlimited is going to be off on their own chain, and that can pose a whole host of ways that you can lose a lot of money. You can rely on confirmations in a way that is not very secure. Who knows what type of code is actually in Bitcoin Unlimited when it comes to managing the private keys. There could be some type of attack vectors or surfaces in there when it comes to the way signatures are done or the way private keys are handled, etc., that could then expose your Bitcoin Core coins when you're dealing on the Bitcoin Unlimited network. So I mean, there are a whole bunch of ways that people could actually lose a lot of money by running software, which is the reason why, you know, money follows management, and it follows the software that you run, and in this case it's following Bitcoin Core, because, and I sent you the link before the show, but it shows that there are about 55,000 full nodes currently in the Bitcoin network, and 51,000 of them are running Bitcoin Core. So the vast, vast majority of the Bitcoin network is running Bitcoin Core code, and that's a vote of confidence in the Bitcoin Core developers. And it's also a vote saying, when it's serious about my money, this is the software I'm going to run. Because not everybody who uses Bitcoin is actually running full node software. You know, if you're using a bread wallet on your iPhone, you're actually connecting to a bread wallet node that's then connecting to the Bitcoin network or whatever. But when people want to deal directly with the Bitcoin network and they want to know that they absolutely have Bitcoins and not something else, and when they want to deal with absolute control over the private keys, which is the most important part of Bitcoin, then they're using Bitcoin Core software. And like, why is that? It's because that's the software that they trust. And why do they trust it? Because those developers have earned their trust. You know, they've developed this software for the last 8 years. We've got a $20 billion market cap. They're the absolute legends in the protocol space and in the internet. Like actually building the protocols that the internet has used. I mean, these are the legends. These are people like Bram Cohen, who invented BitTorrent, Adam Back, who invented telescopic circuitry that's used in Tor. He helped develop zero-knowledge systems, which was a precursor to Tor. He's cited in the Tor white paper. He's cited in the Bitcoin white paper. I mean, like, if you're going to trust your money, like, who are you going to trust it to? Are you going to trust it to the legends, or are you going to trust it to a bunch of junior varsity high school bench warmers who can't compete and get their code into Bitcoin Core, and so they want to fork off and do their own project? Well, I mean, the reason you fork off and don't develop on Bitcoin Core is because you're just not good enough to play with the legends, right? And so I think that's really what this might be about. It's about people who, I mean, maybe it's an emotional thing, or, I mean, personally, I don't care. I don't care about people's emotions. I care about my money, right? And I think a lot of people in the Bitcoin community, that's what they care about, is their money. And they don't care about your emotions. All they care about is how many points are on the scoreboard when it comes to you writing good software. And that's why Bitcoin Core has such a dominant position in terms of client usage. And there's no way to usurp that, because every individual determines what Bitcoin is to them, and they determine it by what software they run in terms of the rules that they follow for validating proof of work, and with whether they handle the private keys or not for their Bitcoins. Those are the two ways. It's network consensus and economic consensus, and every individual is the one who's making that choice. So at the end of the day, like, what software are you going to choose, and what software are you going to trust your money with? And that's a big question that has to be asked of millions and millions of people in the Bitcoin community.
Yeah, this has already been very helpful talking to you. I've learned two things already. One is that you don't think the most recent decline in the price of Bitcoin is because of this fork issue, which a lot of other people do. So that's very interesting to hear. And secondly, you don't think it's actually a major issue. You don't think this is actually going to happen. By the sounds of it, you say that pretty much everyone on the nodes has already sided with Core. So you actually don't think this is a possibility of happening, apparently. It's interesting, though, however, that a lot of people do think it's going to happen, and because of that, they've been moving out of Bitcoin into other altcoins. But let's just talk about the what actually would happen during a fork. Of course, Ethereum did that last year. That was quite interesting. Would it be very similar with Bitcoin? Would it be a case if they actually did fork, if they hard forked it, would you end up with both Bitcoin Unlimited and Bitcoin Core? You'd actually end up with essentially double the Bitcoin on two different blockchains, or exactly how would that work?
Well, that's where we have to see how the Bitcoin Unlimited code actually works, right? and how your wallet software interacts with it. And I mean, there are a whole host of landmines contained within that question. So, you know, the way I would answer it is just sit and hodl your Bitcoins with Bitcoin Core, and you're going to be safe, right? And because, I mean, you could have things like replay attacks. We don't necessarily have, we have a much more decentralized, a much larger economic community than Ethereum has. We don't have proof of Vitalik. Like, we have proof of work. And so, and that work is done by miners. And so, like, how it would actually play out between in terms of the fork, I mean, it could be really interesting, and you could also run into things that are called reorganizations of the blockchain. And so, like, people might be running down on their Bitcoin Unlimited blockchain, thinking they're doing all these transactions or whatever, and then there might be a reorganization, and all of a sudden that transaction history just changes, right? And because there's been a reorganization. So, and if you had relied on all those transactions, and you'd been engaging in a lot of economic activity, and then that record of all that economic activity just suddenly changes, like, I mean, it would just be kind of chaotic. But if you're running Bitcoin Core software, and that's what you're using, and that's what you're trusting, then then you'll be just fine. And I think that's one of the reasons that 20 plus of the major Bitcoin exchanges came out and said that they would continue running and trading Bitcoin Core in terms of a fork, but in terms of Bitcoin Unlimited, they would have to see how they could implement that, how they would not be subject to replay attacks or reorganizations or other things that could just really cause a lot of financial loss. In my opinion, hey, if you think that your software is so good, like, why don't you fork it right now, and let everybody follow after you? I mean, if you're that good and you're that confident, like, just fork it, just hurry up and fork it, and everybody will follow you if it's so good. And if you're such a good development team, like, so, I mean, I don't understand why there's all this bantering and positioning and whatnot. I mean, we saw it with Bitcoin XT. We saw it with Bitcoin Classic. They didn't get accepted. Then Mike Hearn had his whiny rage quit, as Bram Cohen called it, and stomped off to go work on Ethereum. And then Ethereum had a hard fork and lost a whole bunch of money and had chaos for everybody. So, I mean, this might just be part of the politics and the drama of free open source software. But like, I just don't. I mean, this is the same show, third verse, right? Like, I just, what's everybody getting all upset about?
It's very interesting to hear your views. So basically, a lot of the people who are panicking right now think that there might be some sort of hard fork and they're actually getting out of Bitcoin and getting into other altcoins. You're saying that's pretty crazy. There's no reason to do that. You don't think it's even going to happen. Even if it did happen, if you just stuck with the Bitcoin you have with the core, you wouldn't lose anything anyway. So if anyone is doing that, that is interesting. But there's another topic that we should discuss, though, and there is another reason that some people might be going into other altcoins, including Dash, which is now up over $100, is because Bitcoin has become quite slow and has become quite expensive to do transactions. What's your view on that and how that's going to get rectified?
Yeah, so Dash, I actually find Dash really interesting, and it might be where I differ from a lot of people in the general, Bitcoin, hardcore Bitcoin community is, I mean, I like to speculate. I like to make money. And I first interviewed Evan Duffield when Dash was about $4 a coin, and for my podcast, the Bitcoin Knowledge Podcast. And then in November, I had sent out a little recommendation to buy Dash, and it was like $8.85 a piece, and a masternode. And these masternodes are a very interesting concept, but you have to have 1,000 Dash to get a masternode, and so that would be like $8,900, and the masternodes would throw off about 2 Dash per week, which would be $18. Well, now those masternodes are worth over $100,000, and they're throwing off about $180 a week. So Dash in the last 4 months has gone up like 12x. So in my opinion, you look at that 200-day moving average, you take the current price, the 200-day moving average, like Dash is way overvalued. So, I think it's actually a good time to start selling Dash and buying Bitcoin. Whereas back in like first part of December, it was, sell Bitcoin and buy Dash. And I have absolutely no problem with people like speculating on the different altcoins and making money with them. And hey, if there's any type of innovation, I think that's awesome. I really like this masternode concept and how you're able to fund different proposals from the blockchain. Like, I think all that stuff's really cool. Do I feel that Dash is an ultra secure blockchain? I mean, would I really want to be storing tens of millions of dollars of value in the Dash blockchain? No, maybe not so much. And so, if you had a bunch of these masternodes at $4 a coin, if you bought masternodes for $4,000, hey, now might be a time to peel off some of those masternodes and get back into Bitcoin. So, for example, in November, they were 12 Bitcoin per masternode. Now they're close to 95 Bitcoin per masternode. So, hey, just start peeling off some of those masternodes back into Bitcoin, and then Dash will correct back to a more reasonable, more sustainable level where everybody's not driven by greed and panicky and and everything like that, and, you know, just our daily emotions, because the market's kind of like a dog on LSD, and everybody wants to chase the rabbit. And so then when Dash corrects and Bitcoin starts going up again, then you just trade your Bitcoin back for your Dash, and then you have a lot more wealth overall. So, I mean, and it's kind of the same thing with Zero Coin and Ethereum. I mean, Ethereum has gone from about a 1 billion market cap to it hit over a 4 billion market cap, and in a very short period of time. And these types of large moves, they're not very sustainable. You know, otherwise we would see it in the 200-day moving average, you know, the long-term trend. And so, you know, do I think they're going to crash tomorrow? Probably not, but like
they might after this interview, actually.
I mean, maybe because hey, if people are actually moving really large amounts of money into these altcoins, I tried to download an iPhone wallet for Dash, and they don't have one. You know, BitPay doesn't accept Dash. I can't spend my Dash anywhere. I'm sure that they're
actually
working.
The Dollar Vigilante just accepts Dash now, but yeah, we're one of the very few that accept Dash.
Well, that's cool. You know, that's awesome. I mean, I like Dash. I like all this financial innovation, but you know, people. And really, we might be getting closer to the heart of the issue, right? Because people want to do what's going to make them a lot of money. And back in October, November, we were spending, as a community, about $40,000-$50,000 per day on transaction fees. January 1st, we're spending about $80,000 per day in transaction fees. Guess what we're spending on transaction fees today? You know, middle of March, we're spending about $350,000 a day in transaction fees.
Wow.
And so Coinbase has said, hey, we're going to make our customers start paying transaction fees. And BitPay has said, hey, we're going to start putting transaction fees onto the invoices. So it's starting to change consumer behavior. But where do those transaction fees go? Well, they go into the pocket of the Bitcoin miners. So, like, if the Bitcoin miners activated SegWit and increased capacity and decreased the UTXOs and fixed transaction malleability and all these things, then they wouldn't be able to keep milking the Bitcoin community like a bunch of cows, right? But what I really like about transaction fees, and I think it's a great metric because it shows how much value people are actually willing to spend on the network. And so this is day in, day out, $350,000 a day in fees. That's great. It shows that people are really spending a lot of money using the Bitcoin network. And most people in the Bitcoin network, guess what they're doing? They're not spending transaction fees every day because they're hodling their Bitcoins using Bitcoin Core and stuff like Armory. You know, so those Bitcoins sit in cold storage for years. I mean, we're talking hundreds of thousands of transactions a day to get this $350,000 of fees that goes into, you know, Bitmain and Jihan's pocket. And that's a way that he's able to milk the community, you know, but it's starting to change community behavior, is what I'm saying. And at the end of the day, it's the community deciding what software they run for network consensus and what they determine is a Bitcoin in terms of economic consensus. The miners don't make these rules. Every individual running the software makes the rules for themselves, and they individually determine what a Bitcoin is to themselves. So, you know, if the fees get too expensive, the community is going to change their behavior like Coinbase and BitPay have. And if it gets worse, they're going to figure out a way to do something like a user-activated soft fork, or a proof of work change to the algorithm. You know, the community is the one that's in charge of this. The community that's holding Bitcoins, running full nodes, engaging in the economic activity, they're the ones who determine whether the work that a miner does is actually valuable or not in terms of the Coinbase reward. Whether that Coinbase reward actually has any value or not is determined by the whole entire ecosystem. So, you know, the miners are, I mean, you ever see that movie Wag the Dog, right? Like, the tail doesn't wag the dog. Like the tail's part of the dog, but it's not the whole dog. And every individual is the one making their choices based on the software that they run.
So one of the things that it seems Roger Ver has a major issue with is the high transaction fees and the slowness of the transactions. And he says it's going to hurt Bitcoin dramatically. I saw one, for example, I think it was on Jack's wallet. Someone's trying to transfer $10 worth of Bitcoin, and the transaction fee was $2.50. So 25% on that small transaction. But so do you not see that as a major issue? Are you not worried that if the transaction fees are expensive and it's slow, that it's really going to damage the amount of people who will use Bitcoin?
Well, it definitely prices out certain use cases. But anybody who really cares about the scalability of Bitcoin would want SegWit to be activated immediately, because it fixes transaction malleability and will enable the Lightning Network. Now, who doesn't benefit from these type of scalability improvements? In the short term, it's the Bitcoin miners, because they don't get to keep milking that $350,000 a day. And so as long as the miners can continue to keep the community distracted and just talking about, fighting about this or that, or, all this bickering and infighting, they keep the status quo. And by keeping the status quo, they milk every day these transaction fees. Maybe they give $50,000 a day to Roger in order to keep this whole discussion going on. I mean, the thing is that we don't know, we can't know, and do I think it's even relevant? No. In fact, I think it's great. If Roger's able to make $20 or $30 or $50,000 a day by splitting transaction fees with the miners in order to perpetuate the community infighting and bickering and to keep the status quo, hey, all the power to him. I don't think it's relevant to the discussion, but if you really care about scalability and you really care about fixing a lot of the problems that Bitcoin has, or in other words, upgrading them, activate SegWit. Transaction malleability, UTXO growth, quadratic versus linear scaling, Lightning Network, so many of these issues SegWit fixes. And the code's there; it's ready to be activated. So push for it to get activated. It's
push who? How do you get this activated? It's confusing.
Well, it's very simple. Get the Bitcoin miners to signal SegWit readiness. So Bitmain, it's very easy. If Bitmain would signal, then we would apply. Then the Bitcoin network would begin applying SegWit consensus rules, and but it might even be.
But how do I, as a person, get a Bitcoin miner to signal this?
Well, I mean, why would why would Bitmain want to do this when they're able to milk you of $350,000 a day in transaction fees? I mean, and
right.
also,
but I'm asking how do you're saying just people, if you want SegWit, push for it to get it done. But how does a regular person do this? How does this actually happen?
Well, I mean, Jihan told me back in November that if Roger would be in favor of SegWit, then Antminer would signal and be in favor of SegWit. And I talked with Roger down at Anarchapulco about this, and he's in favor of a lot of the things that SegWit fixes, but he's not in favor of SegWit. So, I mean, it's kind of just perplexing to me. But, at the end of the day, people have to do what's going to be in their best interest in terms of financial interest. And I think that includes the short, the medium, and the long term. And so personally, I would like to see SegWit activated. I would like to see this innovation and this with Bitcoin and everything go forward. But hey, if it's going to hurt Bitmain's profitability in terms of the $350,000 a day they can milk from all the Bitcoin community, and also, I don't know what effect this SegWit would have on ASIC Boost, which is a proprietary, patented way that they do their Bitcoin mining and stuff that gives them about a 20% efficiency bonus. I don't know how SegWit would impact that. So, I mean, maybe it would actually be hitting Bitmain with a double whammy in terms of like how much they're making from their mining operation. But, for the medium and long term, SegWit is a grand slam home run for Bitcoin. But in the short term, hey, if it doesn't help our miners, like, I can't fault them for not wanting to activate it, because, hey, if I was mining, I would want to milk $350,000 a day from the Bitcoin community. Heck, I'd want to milk $5 million a day from the Bitcoin community. Like, I'd milk as much as the Bitcoin community is willing to pay. And I don't think
even if it damaged Bitcoin dramatically?
I don't think it would damage Bitcoin, because the higher those fees go up, the more it shows how much people value Bitcoin and how much people are willing to pay to use it. And if they're willing to, if there's this actual use case, it puts a floor on the Bitcoin price in terms of how low the Bitcoin price can go, because people are willing to just hodl it. They're willing to just hold Bitcoin as a store of value and as digital gold, because we got these 7 different network effects, right? We got speculation, we got merchants, we got consumers, miners, developers, financialization, world reserve currency status. And that first primordial network effect of speculation, of just buying it to hold it, that's more important than the other network effects. And so if people are using merchants, or the second network effect of merchants or consumers, that's where we start seeing the transaction fees beginning to get paid. So the higher the transaction fees on those second or third network effects, the higher a floor it gives to that first network effect of speculation. So no, I don't think the transaction fees harm Bitcoin in any way. It might slow Bitcoin's growth and development, and it'll definitely begin changing consumer and merchant behavior, like with Coinbase and BitPay not paying the transaction fees but pushing it onto the consumers. And it might change it, away from using it for microtransactions. You're going to be using it for, maybe it's a minimum $10 transaction, or a minimum $50 transaction, or whatever. But all that does is just put a floor on the Bitcoin price. And I think that's a good thing. And if it gets really bad, the community can just do a user activated soft fork and activate SegWit as a community without the miners. So I don't think it's going to damage Bitcoin at all.
Fascinating. So glad to talk to you about this. You know so much more than most people about all this sort of stuff, and so interesting to hear that you, as I mentioned before, you don't believe the price has gone down recently because of the fork. You don't think the fork's really an issue. You actually don't even think the transaction costs are a major issue. That's all fascinating to hear, and I'm definitely going to be asking...
I mean, we're looking at, this is based on comparative goods value theory out of Austrian economics, subjective value theory, and network effects, and how that gets applied in economics also. So, I mean, it's really not hard to game theory all of this out when you have a correct understanding of the economics.
Yeah, it's fascinating. I'll definitely be bringing up a number of these items with Roger Ver. That'll be in our next interview, which I'll have on the Anarcast channel. So if you don't have that, subscribe to it down below, and make sure you don't miss that one. Be very interesting after talking to Trace. So very interesting, Trace. Is there anything else that you wanted to talk about in regards to these issues?
Well, I mean, if you think about it, if the high transaction fees, if that were such a... If low transaction fees or zero transaction fees were so important to people, then why aren't people using Dogecoin and Litecoin? Why are they paying these Bitcoin transaction fees?
Right.
We have substitute and alternative goods, to transfer value over communications. You can use Dash, you can use Dogecoin, Litecoin. Pick your flavor. I mean, why are they paying these transaction fees? If they don't have to, and they don't have to because you got all these other options. So I mean, it's like they're paying the transaction fees because they derive some value, because they're acting in a way deliberately to bring about some ends, and the way that they bring about that ends is accomplished through the use of paying these transaction fees. Now, it's not our position to judge whether those uses are rational or a good idea or anything like that. And that's all subjective value theory. But at the end of the day, what they're doing is they're paying $350,000 a day in transaction fees. So they derive some value from it. Day in, day out, they're getting milked by Bitmain day in, day out. Hey, they're apparently willing to get milked, and they derive some type of benefit from it. So who am I to say that that's that they're stupid or anything? They're paying it. It's not a problem. We got a huge line of people willing to pay these transaction fees, and the price just keeps going up. So the line keeps getting longer. Like, where's the problem? I don't see any problem.
Well, that's one of the interesting things about all this, that a lot of people are saying, oh, Bitcoin's got all these problems. It's because so many people are starting to use Bitcoin. Bitcoin's really becoming just so widely used and so big that it's really outgrowing itself in many ways. It needs to keep up with its own growth. And it is interesting to hear your perspective on the transaction fees. For me personally, I know that I've seen the transaction fees, and I never really have much of a problem with it, because I know using an actual bank and a bank wire transfer to someone in China or wherever I'm sending money is going to take an hour and a bunch of phone calls, and they're going to probably freeze my account at some point to make sure I'm me, and then it's going to cost $50. So I'd be happy paying, even $50 or even more probably, just not to have to use the bank. So that is interesting. So the market is really, I guess, trying to discover what the actual value of using Bitcoin is.
Yeah, and Bitmain's performing a very useful service in helping figure out how much people are willing to be milked by Bitmain. And so it's like, I think Bitcoin's operating the way it's intended to. Now, what we should keep in mind is that the general trend of these protocols is to solidify and dry, right? That you can think of them kind of like wet concrete. Well, Bitcoin's an 8-year-old protocol now, and the concrete is drying. And so, we've got maybe 2 or 3 soft forks that we can get into Bitcoin, but then it's going to pretty much dry, and it's not going to change. And that's going to be a really good thing. And we're going to be able to build additional layers on top of it, things like the Lightning Network and many, many other things. But it's just because the cement's drying, just because we're no longer the 6-month-old startup or the 2-year-old startup, and it's just part of the natural growth cycle that things like this happen. And so I'm not worried at all. In fact, I'm more optimistic than ever, and I'm trying to figure out when's going to be a good time to start moving some of those Dash profits back into Bitcoin. Because I do think that the Dash is quite overvalued, because it's just gone up 12x in 4 months.
Yeah, I had so many people in the last week contacting me. Should I buy Dash? I'm going to buy Dash. Where do I buy Dash? And I'm like, well, I told you about it a month ago when it was at $17. It's now over $120. But just based on just the amount that it's spiked, I don't even know. Well, no one knows what the true value of Dash is right now. But anything that goes up 500% in a month, I'm generally not going out of my way to buy a lot. So I actually think, as you do, that it probably will have a retracement. I actually think after this video goes live, we will see probably a retracement, but we'll see what happens.
I mean, just to throw something out there, in the first part of December, I had sent Evan an email about, I had an investor, not myself, but I had an investor friend that wanted to buy between $500,000 and $700,000 worth of Dash. Which today would be, let's assume it only went up 10x, so that's going to be $5 to $7 million. Well, he's going to have to, he acquired his stash somewhere else, but he's going to actually have to he's begun peeling off and selling off that Dash, and so he's got to have somebody on the other side of the transaction to buy his Dash at these current market prices. And he's moving back into Bitcoin. So, the smart money doesn't chase the rabbit, if you know what I mean. You make money when you buy, not when you sell. And so you have to be able to, kind of see where the puck's going and don't be the one that gets caught up in the mad rush. And Roger's been very open about how he owns Monero, and he owns Zcash, and he owns Dash, and he's got stakes in these other places. And so, somebody's selling on the other side when you're buying, and everybody seems to like to talk their book. So, just keep that in mind. Personally, I don't have any problem with people talking their book and making good money, but hey, it's caveat emptor, right?
Yeah, definitely. Interesting times. It's such an interesting space just to watch, these free market currencies that never even existed, cryptocurrencies, that wasn't even a word 10 years ago, to see how it all develops, how the market itself just totally adjusts. Like you said, with Bitcoin, it's just the market, and it's free market. There's no one regulating this. There's no one who owns Bitcoin. There's no CEO deciding what to do, and the market's actually making it all work. So that, to me, is the most fascinating part.